Okay, let's start with what seems like a really basic question. What's the ultimate point of all the money governments collect from us?
Right. It sounds simple, doesn't it? Just, fill up the government's bank account.
Exactly.
Ah.
But what if the answer is actually much bigger than that? What if it's about shaping the entire future of a country, including yours?
It absolutely is. We're not just talking about bookkeeping here. It's about fundamentally different ways to build prosperity over the long haul.
So today we're going to really get into that difference, this strategic split between public investment and what's often called current spending.
And we're using India as a fascinating example, looking at some recent insights presented to the Indian Revenue Service, actually.
Okay, so the mission here is to unpack how things like efficient tax collection and smart decisions about where money goes can create these ripple effects, right? Multiplier effects.
Precisely. These multipliers can really transform an economy. Think of this whole discussion as a way to understand the forces, sometimes hidden, that drive economic change and societal development.
It's definitely more than just spreadsheets and budgets. It's about building a better future,
Right.
fundamentally.
And what that means for everyone's opportunities.
All right, let's dive in. To understand India's approach, we have to go back to that first question. What's the real purpose of collecting revenue?
Well, the source material we looked at is crystal clear on this. It's about giving the state the power, the capacity to invest.
Invest in what specifically?
Things like critical infrastructure, yes, but also human potential education, health. These are the things that ultimately decide how competitive a nation is on the global stage.
Okay, so let's break down that distinction you mentioned earlier. Public investment versus current spending.
Right. Public investment is often called capital expenditure or CapEx. Current spending is revenue expenditure.
So current spending is what? Day-to-day stuff.
Pretty much. Think of it as covering society's immediate survival needs. Salaries for government employees, subsidies, interest payments on debt, keeping the lights on. It's significant.
How significant in India's case?
In the budget for FY 2025-26, it's around 39.44 lakh crore. That's roughly 470 billion US dollars, a big chunk.
And public investment, the capital expenditure.
That's about building for the future, creating assets that will produce value over time, roads, bridges, power plants, digital networks.
And the figure for that.
For FY 2025-26, it's budgeted at 11.21 lakh crore. So about 134 billion US dollars.
So if we look at the total pie, the total expenditure is 50.65 lakh crore, which is about, what, 14.3% of India's GDP?
That's right. And the split is roughly 78% for that immediate current spending and 22% for the longer-term capital investment.
But you mentioned something, effective capital expenditure. That sounds like there's more to the story.
Yes, exactly. The effective figure is actually higher, 15.48 lakh crore. This includes grants the central government gives to the states specifically for creating capital assets.
Okay. So the central government isn't just funding its own projects.
No, it's actively working with the states, building those cooperative relationships. Some sociologists might call this building social capital between government levels, fostering teamwork to get infrastructure built nationwide.
Interesting. And where is this investment focus? What are the priorities?
Infrastructure development gets the lion's share, definitely, followed by investments in the social sector, things like education and healthcare.
It sounds like a deliberate strategy to create network effects. Is that the term?
That's a good way to put it. Each investment opens up more possibilities. Better roads mean better business. Better schools mean a more skilled workforce. For you, listening, this directly impacts the business climate, human capital.
And I guess socially, it shapes how easily people can move up, right? Connecting rural areas to cities, for example.
Absolutely. It physically changes the social structure, potentially bringing more people into the formal economy, expanding opportunities. It's not just abstract economics, it's real societal change.
Okay, let's talk about India's commitment here. This focus on capital formation. The numbers look pretty dramatic, especially recently.
They really are. The trajectory from, say, 2020 up to the 2025-26 budget is quite remarkable.
How so?
We're looking at nearly tripling capital investment in just 5 years. It went from around 4 lakh crore back in FY 2020-21 to that 11.21 lakh crore figure for FY 2025-26.
Wow, that's huge growth. Over 10% just from the previous year.
Exactly. And what's really striking is when this ramp up happened, a significant part of it was during the pandemic.
Wait, even when the economy shrank? didn't contract by something like 6.6% in FY 2021.
It did, but the government actually increased capital spending then. It was a conscious, counter-cyclical move.
So prioritizing long-term building over immediate, maybe fiscal caution.
Precisely. It shows a kind of administrative will, focusing on transformation even when conditions are tough, almost like different parts of the system pulling together to maintain long-term health.
So the focus areas, you mentioned infrastructure, digital, green energy, manufacturing.
Yeah.
How do these act as drivers of change?
Now you could call them modernization vectors. Each one doesn't just build something physical, it reshapes social organization and economic possibilities.
Can you give an example?
Sure. Digital infrastructure. It's not just about faster internet. It creates entirely new job markets, new business models, even new ways we interact socially.
And this investment reflects what people expect now, too, right?
Yes, there's a feedback loop. People see development, they expect more quality services and infrastructure. And when the government delivers visibly, it can actually improve tax compliance. People are more willing to pay when they see results.
That makes sense. And for the tax folks themselves, this means new challenges, too.
Definitely. Better data analytics capabilities, overseeing new industrial clusters, figuring out novel tax issues like carbon credits.
Yeah.
It all evolves.
Okay, that's the internal picture.
Huh.
How does India's investment push look when you compare it globally?
It holds up surprisingly well. India's public investment is about 3.1% of its GDP.
And how does that compare to, say, the OECD average?
It's actually higher. The OECD average is around 2.7%. So India is ahead of countries like the UK, Germany, and the USA on this metric.
Really? What are their figures, roughly?
The UK is around 2.4%, Germany 2.5%, the US about 2.3%. Of course, China invests much more intensely, somewhere around 5.2% of GDP.
That 3.1% is significant then. But is it just about the amount spent?
No, not at all. Quantity is one thing, but quality and efficiency are crucial. You see top performers, like some Nordic or East Asian economies, combine high investment with really strong governance,
Right.
efficient systems, as Weber might say.
Making sure the money actually delivers results.
Exactly. And another interesting point from the OECD data, nearly 60% of public investment across those countries is actually managed locally or regionally.
That fits with India's federal structure, doesn't it?
Yeah,
Pushing implementation down to the state level.
it does. It suggests that effective implementation often happens closer to the ground, tailoring projects to local needs.
You also mentioned the tax to GDP ratio link earlier. How does that play in?
Well, countries with higher tax collection relative to their economy size generally have more fiscal space to invest. The OECD average tax to GDP is around 34%,
And India's is.
around 18%. So achieving that 3.1% investment rate with a lower tax base is frankly quite remarkable. It speaks to strong political will and improving administrative efficiency, doing more with relatively less compared to global peers.
So beyond the stats, what's the deeper takeaway here?
It's that public investment has those obvious manifest functions, building a bridge, a school, but it also has these deeper latent functions.
Like what?
Like strengthening the government's own capacity, building social cohesion, driving fundamental economic shifts. But achieving those deeper benefits, that takes real professional skill and execution.
Okay, let's pivot to the power of this investment, the multiplier effects. IMF research from 2023 seems quite bullish on this.
Yes, very much so. One key finding is how the impact differs. Low-income and emerging economies, like India, actually stand to gain the most from infrastructure investment.
More than advanced economies. Why is that?
The potential gains are estimated at over 60% for lower-income countries, compared to maybe 43% for advanced ones. It's partly because there's less existing infrastructure, so each new project fills a more critical gap, unlocking greater potential. Think of it like adding the first road versus adding another lane to an existing highway.
Makes sense. And the IMF points to specific ways this works, mechanisms.
Right, three main ones. First, the short-term demand kick. Building stuff creates jobs, buys materials. It directly stimulates the economy, especially useful during downturns. Multipliers here can be quite high, maybe 1.5 to 2.5 times the initial spending.
So immediate economic activity. What's the second?
That's the long-term supply effect. Good infrastructure makes the whole economy more productive. It enables new industries, changes where people live and work, reshapes cities.
Like the Delhi Metro example you mentioned.
Exactly. That didn't just make commuting easier. It fundamentally altered real estate patterns, commercial development, the whole structure of the national capital region over time. That's a supply-side transformation.
And the third mechanism.
Crowding in private investment. Good public projects often make it more attractive for private companies to invest alongside them.
So public investment doesn't push out private money, it actually attracts it.
Often, yes. It signals confidence, provides essential groundwork, it builds what you might call institutional trust. Businesses see the government committing seriously, and they're more willing to put their own capital to work.
And fiscally, all these positive effects circle back, right?
Right, they absolutely should. An efficient tax administration is key here. It needs to capture the gains from that increased economic activity. This creates a virtuous cycle.
Mm.
Good tax collection funds, good investment, which grows the economy, which expands the tax base further.
Which brings us to a really crucial point from that IMS study.
Yeah.
Efficiency, or rather the lack of it.
Yes, this was a sobering finding, but also a hopeful one in a way. The study found significant efficiency gaps in public investment pretty much everywhere.
How significant?
Globally, the estimate is that infrastructure output could be boosted by 55% without spending any more money, just by improving how projects are managed.
55%, just from being more efficient. That's massive.
It's huge. And it applies across the board. Even advanced economies are only operating at about 55% efficiency on average. Emerging economies around 45%. And low-income countries, maybe 35%.
So nobody's perfect, far from it.
Not even close. It suggests that actually translating investment plans into tangible, high-quality outcomes on time and budget is universally challenging.
But for India, as an emerging economy, this sounds less like a problem and more like a massive opportunity.
Exactly. If India could just reach the efficiency levels of the top performers within its own income group, say, the 90th percentile, the boost to infrastructure output would be dramatic, all without needing a proportional hike in spending.
It's real transformative potential.
It really is. And focusing on efficiency is critical now, isn't it? With government finances stretched post-pandemic and debt levels rising globally, getting more bang for your buck is paramount.
It values getting things done right, the actual execution.
Yes, that administrative competence we talked about, and ultimately it means faster development, quicker economic transformation, more social mobility for citizens. It's a huge social opportunity.
So how do you seize that opportunity? What are the practical steps? Are there frameworks or best practices?
There are. The OECD, for instance, has something called the Effective Investment Toolkit. It lays out global best practices for managing public investment.
What kind of things does it cover?
It hits all the key dimensions. Having a clear long-term strategic plan, coordinating effectively between different ministries and levels of government, using solid evidence for appraising and selecting projects.
So choosing the right projects.
Right. And then strong execution during implementation, proper monitoring and evaluation to learn what works, transparency to keep public trust, and a clear, stable regulatory environment.
Seems comprehensive. What about things like public-private partnerships, PPPs?
They fit in too. Well-structured PPP frameworks can definitely enhance outcomes by bringing in private sector expertise and efficiency, while the public sector retains strategic control.
The source material also mentions specific improvements and their potential impact.
Yes, it highlighted a few key areas based on the IMF research. Just strengthening the basic public investment management, or PIM, framework could yield a 16% improvement.
Okay.
Improving how results are measured could add another 13%. And better coordination across government levels, maybe 18%.
Those are decent gains individually.
They are, but the really striking finding was the combined effect. If you implement improvements across all these areas simultaneously, the potential improvement jumps to over 55%.
Wow, so the whole is much greater than the sum of its parts.
Exactly. It's synergistic. These interventions reinforce each other. And that brings us back to that powerful quote. Closing the efficiency gap could increase infrastructure output by up to 55% without additional spending.
That really frames the challenge and the opportunity, doesn't it? It's the difference between just steady progress and genuine transformation.
It absolutely is.
So, implementing this, it's not an overnight fix, I assume.
No, definitely not. Institutional change is complex and takes time. The thinking is usually phased.
How so?
Well, short term, maybe the first year or two, you focus on building foundational capacity, maybe streamlining some administrative processes, getting the basics right.
Okay, build the foundation. Then,
Medium term, say years 3 to 5, you tackle the bigger stuff, enhancing coordination more deeply, perhaps some structural reforms within ministries, fostering a culture of learning from experience.
really changing how things operate.
Right. And then long term, year 6 and beyond, you're looking at building real adaptive capacity, being able to respond to new challenges like climate change, using more sophisticated PPP models.
It sounds like a long journey, but
Eh,
perhaps one India has already started in other areas, like tax administration itself.
That's a great parallel. The modernization of India's tax system, with things like e-filing and faceless assessment, shows that large-scale systemic change is possible, even if it's complex and takes sustained effort.
Okay, so as we bring this deep dive to a close, let's loop back to where we started. That question about the purpose of the revenue collected.
I think our discussion really shed light on just how profound the answer is, especially for India's path forward.
We've seen India positioning itself strongly in public investment globally, outperforming many developed nations relative to its resources.
Which is a real achievement, reflecting both political focus and administrative effort.
But then there's this huge prize, the potential 55% efficiency gain. Not by spending more, but by spending smarter.
Right. It's about maximizing the development impact of every rupee spent, converting resources into results more effectively.
And we've touched on how this investment builds different kinds of capital, economic, yes, but also human and social capital. It shapes the very fabric of society.
And consequently, it shapes the opportunities available to people, influencing social mobility for generations to come.
So maybe the final thought for you, our listener, to chew on is this. India has shown it can adapt and learn, especially from crises. Now, its success seems to hinge not just on maintaining high investment levels, but on relentlessly chasing that efficiency.
Continuously improving how investment is managed, how institutions adapt.
Exactly. So what do you think this relentless focus on efficiency means for the future shape of Indian society? And what role does effective governance really play in unlocking that massive 55% potential we talked about? Something to ponder.